Hello, everyone. Welcome back. So, we all know how manipulative the stock market is, how volatile it is at sometimes. But the Fed meeting a couple days ago brought it to a whole new level. We saw one guy ask one question, and it tanked the S&P 500 over 2%. 2%. That gets you thinking, right? Gets you thinking. We'll look into that question a little bit, but just imagine how one question can tank the whole stock market 2%. There was only 7 minutes left in the meeting. 7 minutes left. This guy asked a question, and it tanks. Meat kind of did a whole good video on this. You should check him out. You probably already know about him. But he kind of talked about, imagine if he owned shorts in the market. Imagine if the guy owned shorts and went in with this bearish question and just raked it in. Imagine, right? That's genius. That's genius. You go into these meetings with a question to ask, and you know it's going to take the market, and you just load up on shorts before. Genius. But yeah, enough talking. Let's look at this question.
Yeah.
Great. And just a quick follow. It looks like stock and bond markets are reacting positively to your announcement so far. Is that something you wanted to see?
So stock and bond prices were actually negative at the time of the question, but the last time I checked his phone, they could have been positive. They had a nice little rally um, before the speech, before the questions, but they were actually negative at the time of the question.
Something you wanted to see? Is that a problem, or how that might affect your future policy to see this positive reaction?
You know, we're not targeting any one or two particular things. You know, our message should be, what I'm trying to do is make sure that our message is clear, which is that we think we have a ways to go. We have some ground to cover with interest rates before we get to that level of interest rates that we.
Ew. Ways to go, ground to cover. That's disgusting. That's really bad. Yeah. We've known that they have been very focused on getting inflation to 2%. Very focused, very goal oriented. So it's not very surprising. But yeah, the fact that we still have a ways to go is unfortunate. And you'll kind of see what he means by a ways to go. So.
Of interest rates that we think is sufficiently restrictive. And putting that in the statement and identifying that as a goal is an important step. And that's meant to put that question really as the important one now going forward. I've also said that we think that the level of rates that we estimated in September, the incoming data suggests that that's actually going to be higher. And that's been the pattern.
Higher rates. I wonder where we saw that. Last video I made, we actually talked about this article that came out a couple of days before the meeting. And it said the Fed, we expect the Fed to raise rates to about 6% by next June. And so yeah, go check that video out. It actually shows a lot of great stuff. It came out before the Fed meeting. So yeah, we've kind of been expecting 6% behind the scenes, but I don't think the market has priced in 6% yet. And so we'll have to see that get priced in as well. But yeah, we saw this before the Fed meeting came out, which was great. And it kind of even says here, the Fed could still slow in December, could still do a 50 basis point hike in December and still hit the 6%. And that was like one of the main things Powell talked about was slowing down to 50%, but going for longer and going higher. And so that's very interesting, and we all got to see it in the video right before if you tuned into that one.
And that's been the pattern. I mean, I would have little confidence that the forecast, if we made a forecast today, if we were doing an SEP today, you know, the pattern has been that one after another, they go up, and, you know, that'll end when it ends, but there's no sense that you know, that inflation is coming down. It just, if you look at I have a table of the last 12 months of 12-month readings, and there's really no pattern there. We're exactly where we were a year ago. So, okay. So I would also say it's premature to discuss pausing, and it's not something that we're thinking about. That's really not a conversation to be had now. We have a ways to go.
And it's so interesting, right? Like you see him go, looking at his notes, bearish things to say to make the stock market go down. Oh yeah, it's premature to talk about pausing, right? This dude pulled everything out of his bag to tank the stock market. Everything. And we'll kind of look at when the question was asked and how the stock market reacted. But he was very bearish on the stock market. And it's for a couple reasons. Well, if the stock market goes up, it undoes a lot of the work that the Fed has been putting in. And so he needs to send it down, or they lose a lot of the work they've been putting in. And that's why we won't see this rally for a while. That's why this is just a bear market rally. And we're probably going to have another downturn and going to see new lows, lower lows. And it's because if it goes up, then the Fed has to fight even harder for inflation. And that's, yeah, so let's kind of look at how the stock market reacted to this. Okay, ready? Right here. So the question was asked around 08, 09. Right here. So this is when the question was asked. Right around here. We saw this move upwards before the speech early in the morning. And then this is when the guy who asked the question last checked his phone apparently. And then it started to go down, down, down. And then right here he goes, it seems like stocks and bonds are reacting positively, asks the question and finishes right around 09, 010. Or no, he finishes the question like a little earlier. And then Powell finishes what he's saying around 09, 010. And just look what happens. Boom, 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 boom. Right? This is a move of over 2%, right? He single-handedly, with one question, crashed the market over 2%. Absolutely insane. Absolutely insane. Like, oh man, imagine if you could just go in with a bearish question, own some short positions right before. It's easy. So easy. All right. Thank you for watching. Tune in again next time.